great to have you with us. Great to have you back, Lydia. You know, it was interesting. I want to get right into the dollar and the new high for the year because it seems somewhat counterintuitive when you think about it. The Fed cut rates yesterday, yet the dollar rallied. Why do you think?
Yeah, thanks for having me back, Ben. So, in my view, the Powell basically signaled that there wasn't going to be a series of rate cuts, and that's the biggest thing in reaction to the actual interest rate cut that happened yesterday. The market was actually thinking there was going to start a series of cuts, and that's what we've seen from the Fed previously. Granted, it's been over 10 years since the last rate cut, and at that time we saw a series. So he was very clear, and while there's arguments whether he was clear or vague, and still left maybe another one on the table for September or December, I really think that we might not see any more rate cuts going forward, and the market's pretty much telegraphing the same thing as we see the dollar just ratchet higher from here.
Yeah, it seems like you're not alone in terms of not seeing rate cuts in the near future. Dollar traders seem to feel that way as well. But it was interesting because the move that we saw was also in the direction of trend. I mean, this is an attempt to break out. This is a new year high print. Certainly gives us something to keep an eye on in terms of follow through as far as directional conviction, and especially if we can get some really strong eco data here in the U.S.
Oh, yeah. No, absolutely. And I mean, it just goes to what you were speaking about with the jobs data. So we had a disappointing month, I think, in May, and then June and July kind of tempered that. And so if we see a strong number, even if it's consensus, if it beats consensus, regardless if it's lower than last month, I think just a strong number just continues to underpin the fact that the Fed really has no real reason to do a rate cut. If you call it a mid-cycle adjustment, there's no fundamental reason why the dollar should be weak. So the fundamentals for the dollar continue to be strong. And the fact that we will likely see fewer rate cuts than previously telegraphed, I think is really going to keep the dollar strong from here.
All right, another thing, Lydia, that's been keeping the dollar strong has been some weakness in the British pound. There's a lot to unpack there in terms of discussing what's behind some of the weakness. Let's just begin this with this morning's rate decision. Looks like the Bank of England left rates unchanged and had some concerning comments related to Brexit.
Yes, I expected that they would keep rates on hold. Really, and this has been the case, I think, pretty much since the referendum, is that they are really looking to see what happens with the deal or no deal, what happens with Brexit, and what that resolution does to the UK economy. So with this new prime minister and pretty much a new administration being quite combative with the EU, it's been a lot of uncertainty back into the pound, and this is why we continue to see weakness and accelerate even from before. So we're probing those really post-referendum lows back in 2016, early 2017 right now, and it's our view that we can go below $1.20.
So enormous amount of uncertainty related to the referendum, as you mentioned, but there's got to have a new prime minister as well who's kind of stirring up some dust also. Talk to us a little bit about your thoughts on Boris Johnson.
Yeah, new prime minister Johnson is taking a quite different approach than Theresa May. I think traders can continue to expect that he's going to be combative, that he's going to I think he's quite comfortable with the no deal. I know the Governor Carney kind of insisted that his agenda is to have a deal, but he hasn't really telegraphed that, right? And the market's acted accordingly. And I suspect that we see the UK finally exit on October 31st. I don't think we'll see another move out of the deadline. And as such, I don't think Johnson is going to waver from his position either. The EU is very staunch, and really, let's see who calls each other's bluff. And I think at the end of the day, I think the new prime minister is going to be resolute in his stance that the UK exits.
So a different approach that he has in terms of a much more aggressive, hard-nosed, kind of hard-lined approach. You said you don't think that he's going to step away from that, but I'm wondering, will that different approach provide a different result? Because it doesn't sound like the EU is willing to step away from their approach as well.
Yeah, no, exactly, which is why no-deal Brexit is on the table, and the odds for a no-deal exit have even increased since this prime minister. I mean, over the weekend, he pretty much made it clear that he's ready and prepared to remove the UK from the European Union without a deal on the table. he's not willing to negotiate further, and what the EU has already agreed to under Theresa May, and they're sticking to it, like you said. So, yeah, I think it'll be interesting to see if he dials back and backpedals as the realities of his rhetoric really start to set in.
Yeah.
There's already talk that he'll be speaking with the EU commissioner at the G7, and so that's something to watch to see if anything comes out of that. If he starts to, and he, as in the new prime minister, starts to understand the true realities of what he's stepping into. It's one thing to talk to your constituents. It might be another once you're at the negotiating table.
Yeah, I can't wait to see if the EU, the EC is basically like, look, it's our way or the highway still. I wonder, Lydia, does a rate cut ease the pressure on central banks around the world, for example, China?
No, I don't think so. We've had a lot of central banks that are being quite accommodative, and yet we're seeing globally economic growth kind of start to weaken. I think the exceptions are probably in the U.S., but even our manufacturing here is also starting to weaken as well. So that's probably the thing that I don't think worries China too much. I think they're more in a wait and see, especially as we, in the U.S., we start to head into our election season. So I think they're quite fine to kind of wait and see. And I think it's important for us to put into context that a slowdown in the Chinese economy is still like a 6 or 7% growth rate, right? So I think they're positioned to kind of see what happens at the negotiating table going forward and see what happens with our election results.
Lydia, I have one more question, then we'll let you get on with your day. I'm wondering, every time the dollar rallies and gets into a new high like we're seeing right now, that always kind of brings up this conversation again about the impact that could potentially have on emerging markets. I'm wondering, as we see the dollar strengthen here again today in reaction to, as we mentioned before, the fact that the bulls think that there's not going to be more rates to come, what does this mean ultimately in terms of the ripple effect for the EM and emerging markets? Are we going to start to hear about concerns related to them and the pressure that this puts on them?
Oh, yeah, absolutely. With the emerging markets, especially those countries that have their currencies pegged to the U.S. dollar, and could use, some easing from the Federal Reserve, quite frankly, won't likely to see that. And so that will be interesting, especially as the emerging markets have taken on quite a bit of debt in terms of bonds, over taking advantage of the low interest rates, right? So it's going to be interesting to see what emerging markets, I think they'll consider just still pressure in those markets.